Barton Biggs is co-founder and managing partner of the $1.4 billion hedge fund Traxis Partners. Good morning, Barton. Let me ask you this, Barton. It's what everybody wants to know from you. Is the stock market still a buy at these levels?
I don't know, still a buy. I mean, I would say that these levels, it is rapidly becoming a very strong buy.
Well, you've been bullish on a number of sectors for the past several months. Capital equipment, for example, manufacturing companies, blue chips like 3M and P&G. Do you feel that those, because if they were attractive to you 5, 6, 7, 8 weeks ago, surely they must be that much more attractive to you now?
Yeah, they weren't wildly attractive to me 5, 6, 7, 8 weeks ago. I mean, I certainly didn't foresee the extent of the ineptitude that we've seen in of our political leaders and of the Europeans. But I haven't, you know, I reduced my net long, but I do feel right now this is no time to put out any shorts, and I'm very tempted to think that this is a time to be buying stocks pretty aggressively. And when we have all the sort of classic signs of we have from time to time in the stock market of a panic, and the market's action yesterday is now extremely oversold. People were dumping stocks because of what the president of Emerson Electric was saying on his call yesterday afternoon, and you know there's been a real shock effect of how poorly the politicians have handled this and how little progress we've made on doing the things that we have to do, which is raise the Social Security age, raise the Medicare age, change the calculations of Social Security, cut our defense budget, and raise taxes on the rich, and also correct these flaws in the tax code.
Well, Barton, but you're talking about the ineptitude again. How can you have both things happening, a time to buy stocks aggressively and the ineptitude and the policy inaction you speak of and the threat that it poses to the economy? Are you worried about a double-dip recession?
Yeah, I'm moderately worried about a double-dip recession, but I don't. Who knows how this is going to play out over the next 6 months. The Fed isn't just going to sit on its hands indefinitely. What I'm saying is that today, this morning, stocks are a buy, and that we're going to have a strong rally out of this position we've been in, and we're in right now.
I want to ask you, when you say a strong rally, put it into perspective for us. What kind of a move up do you think we could see?
I think we could see 7–8%.
So we could recover the gains that we lost this year over the past 7 days?
Yeah.
And what comes after that? Is this going to be a choppy market, up and down, buying opportunities here and there, or do you think we'll see a sustained move to the upside such that we will end the year, come out of the second half with the S&P considerably higher? And if so, where?
I don't know. But I can think of things that can be done that would make a big difference. Supposing that the Fed announces that they're going to do a QE3, but it's going to be a different QE3. They're going to actually buy mortgages, and they're actually going to buy single-family homes, because the theory would be that that's the place where 50–60% of the average American's net worth is, and they need to restore confidence. And the way to do that is to get the price of single-family homes rising again, and that would have a huge effect on consumer confidence and on consumer spending.
Barton, if that's the case, very quickly before we go, if that's what you think the Fed is going to do, how do you position yourself? What do you buy?
Well, I think you buy what that's just what you were talking about. I think the cheapest asset. First of all, don't forget that the dollar assets denominated in dollars are extremely cheap. The dollar is tremendously cheap, and so you buy dollar-denominated stocks, and you buy. I think you buy the technology stocks. I think you buy the big high-quality manufacturers like Caterpillar and Deere, things like that. I think you buy, and I think you buy the great consumer growth stocks such as P&G and Coca-Cola and things like that.
Barton, we have to wrap it there. So good to have you here in the Inside Track. That's Barton Biggs of Traxis Partners saying it's time to buy stocks aggressively. You just heard it from him.